There I am. All right. I guess we'll get started since it's a little bit after 2. I'm Elaine Berry, and I'm from Appalachian State University. I'm the Director of Special Funds Accounting.
And I'm Amy Roberts, our co-presenter, and I used to be the Director of Special Funds Accounting. I've taken another opportunity at the university, but I still am definitely very much involved in special funds and want to see the success of Elaine and her promotion to the position. So I'm here to support her and be her best cheerleader.
Thank you very much for that, Amy.
Sure.
I really appreciate that. So we'll get started with what is the Uniform Guidance? And the Uniform Guidance streamlines and supersedes the guidance that was previously contained in 8 different OMB circulars. And and all federal agencies are required to were required to implement the Uniform Guidance. So it includes definitions, the uniform administrative requirements, both pre and post award, cost principles, and audit requirements. So it began it took effect December 26, 2014 for new awards. And if you were in the process of a multi-year contract, at the time that this took effect, you had the option to go ahead and accept the Uniform Guidance on December 26, 2014, or you could wait a year to join it. So that's when it took effect, and it was for existing federal awards and new awards. I'm sorry.
I think someone just needed to mute themselves.
Okay. Existing federal awards continue to be governed by the terms and conditions under which they were awarded. When incremental funding was awarded or additional funding, then you had the opportunity to continue under the old or start with the Uniform Guidance. We had that situation with quite a few of our grants, and we basically, when the additional awards were funded, the additional awards were funded, we went ahead and accepted the Uniform Guidance, mainly just to get started with it. From the university perspective, the Uniform Guidance supersedes OMB circulars A110, A21, A133. And then we also, because we're a government entity, we also relied on OMB Circular A87, which was the cost principles for state and local Indian tribes. So the ones that most higher eds are familiar with are the A133, the A110, the A21, and the A87. Okay. Did you want to go ahead?
Okay.
I'm sorry.
We didn't mention the other other circulars that were included in Uniform Guidance. So it picked up not only the ones that we were familiar with, but A122 and 80, which is the nonprofit cost principles, A89, which is the CFDA, 102, which is the grants and cooperative agreements with state and local governments, and the circular A50, which is audit follow-up.
Thank you, Amy. Okay, the new circular is organized in 7 basic sections. Subpart A, which is 200.0 to 200.99, that contains the acronyms and definitions. Subpart B is 200.1 to 200.199, and that includes your general provisions. Subpart C and Subpart D contain pre-award and post-award requirements. And Subpart C is 200.200 to 200.299, and D is 200.300 to 0.399. And so these two contain the information largely seen previously in A110. Subpart E is the cost principles, which look a lot like what was in the OMB circulars A21, A87, and A122. And then Subpart F, 200.5, contains what would have been previously been in A133. If you can remember how the sections are broken up by the numbers and by what they cover, it will really help you when you're answering any questions on the exam. And then this was created by Amy. This is what's called the Uniform Guidance Bookshelf graphic. And she created it to help visualize the different book portions of the uniform guidance and to break it down into manageable chunks with the specific defined contents.
So this kind of helped me get myself organized. And if you look at the part names, they don't specifically match, because I used terms that help me remember what the sections were about. So that general provisions section I call housekeeping. Overall, from the government standpoint, how things are supposed to work and so forth. So this helped me just organize my thoughts, and when I would get a question about uniform guidance, or when there was a citation that I would see, by looking at the number of the citation, I could tell which part of the uniform guidance that it was coming from, and that just helped orient me to know whether I was looking at a definition from the dictionary section, or whether I was looking at prescribed guidance that was in, say, the cost principles section. So just knowing what those numbers mean definitely help you learn your way around.
Okay, now here comes the fun part. Acronyms. I'm sure you all are familiar with acronyms and how much we use them in our day-to-day life. So in the creation of the uniform guidance, they came up with a lot of new acronyms. Specifically, some of the most interesting ones are the ones you'll need to remember as much as possible. The FAIN, which is the Federal Award Identification Number. That one is very important because it should be on all of your award documents. The FAPIIS, Federal Awardee Performance and Integrity Information System. That's a mouthful.
Do you pronounce that FAPIS, Elaine?
I'm not sure.
Well, that's what I call it. I have my own way of pronouncing some of these acronyms, but that's what I call it, and I wasn't sure if other people did too, but I like FAPIS.
FAPIS, yeah, that sounds good. Okay, REUI, the Relative Energy Usage Index, and where you'll see that comes into play is your indirect costs. And then value added tax. Important. IDS, higher ed institutions, institutional based salary. Very important. So let's see. On our regular list, we have the DUNS number, the Data Universal Numbering System. And if you haven't heard, SAM is getting away from that. They're replacing it by what's called a unique entity identifier, which was supposed to go into effect December of this year. However, that has been extended to some date in the future. And I'm sure that has something to do with the COVID-19.
Before we leave this slide too, Elaine, I wanted to point out SPOC. It's my favorite new acronym. SPOC, single point of contact. So, yeah, so it makes sense from the federal government standpoint that institutions have a single point of contact. The one person that they need to notify or reach, if there are difficulties with an agreement. So SPOC is my new favorite acronym.
Okay, so along with that, we have new definitions. Specifically, the capital assets. Capital assets means tangible or intangible assets used in operations having a useful life of more than 1 year. These include land, buildings, facilities, equipment, intellectual property, including software, whether acquired by purchase, construction, or manufacture, lease, purchase, exchange, or capital leases, additions, improvements, and modifications, but replacements, rearrangements, replacements, rearrangements, reinstallations, renovations, or alterations to capital assets that increase their value or useful life, but not ordinary repairs and maintenance. Then we have the computing devices. This, when A21 went into effect in 1979, before PCs as we know them today even existed, though it underwent revisions in the 90s, it never clearly defined computing devices. And these are machines used to acquire, store, analyze, process, and publish data and other information electronically, including accessories or peripherals for printing, transmitting, and receiving or storing electronic information. Then let's see. Most everybody's familiar with contract, but the one thing on contracts that you need to be aware of is that, there are, pardon?
I'm sorry, I just lost my button to advance the slides.
Oh no.
I'll figure it out. Go ahead.
Okay, so contracts, we have a lot of discrepancy with contracts, whether it's a contract, whether it's a subrecipient agreement. And what you have to remember is that you have to focus on the nature of the relationship and not what the agreement is called. Whoops.
Yep, I'm stuck. Okay, let's see. Here we go. All right. Are you still on the slide, or are you ready for me to go forward?
No, I'm there's a couple things else
Okay.
I wanted to talk about on this one. Contractor. an entity that receives a contract as defined in 200.22, and they started using this to move away from vendor terminology. That's the purpose that they were trying to get away from using contractor. Another important one is general purpose equipment, which now includes information technology equipment and systems. And so information technology systems also includes computing devices and software. Okay.
You want to talk about internal controls?
Well, yes. Yeah, because those are really important. And the definition defines it as to provide reasonable assurance regarding the achievements of objectives, basically effectiveness and efficiency of operations, reliability of reporting for internal and external use, and compliance with the applicable laws and regulations. Micro purchase. The 2018 National Defense Authorization Act, or NDAA, signed by President Trump, increased the standard micro purchase threshold applicable to civilian agencies from 3,000 to 10,000. So that, I think that was one of the first ones we had to get used to, because we were all used to the threshold being 5,000. Oh no, 3,000. Must have been the institution that was 5,000.
Yeah, that it did add to the confusion, because we had the micro purchase threshold when uniform guidance first came out. That was 3,000, which was not a number that we were used to dealing with at all. As a state agency, our threshold was $5,000. So we were scrambling for a time, even trying to figure out how we were going to ensure compliance when we had people with university purchase cards that were that had limits above $3,000, and so those transactions, you know, we're not getting any sort of review before the fact. And so now that the threshold is higher from the federal standpoint than our university and state threshold is, it makes it at least less likely that we're going to run into folks not following the purchasing requirements.
Yep, that's correct. Another new definition is participant support costs. And this includes direct costs for items such as stipends or subsistence allowances, travel allowances, registration fees paid to or on behalf of participants or trainees, but not employees, in connection with conferences or training projects. One thing that's very important about the participant support costs, you must have pre-approval to rebudget anything out of the participant support category. Program income, very important because it now includes license fees and royalties on patents and copyrights. And the federal awarding agency may negotiate agreements with recipients regarding appropriate uses of income earned after the period of performance has ended. So important to remember. Supplies, tangible personal property not described in equipment under 200.33 very notable, a computing device is a supply if the acquisition cost is less than the lesser of the capitalization level established by the non-federal entity for financial statement purposes, or 5,000, regardless of the length of its useful life. So those are some very important definitions that you will see.
I'm going to talk about the conflict of interest section next. And as you can see, now we're into the 200.100 sections. So we're into what I refer to as the housekeeping section now. And so in retrospect, these requirements about conflict of interest seem obvious, but the fact that these clauses had to be committed to writing in this regulation tells me that what seems like common sense maybe wasn't common practice really before. So now it's laid out that the agencies have to establish conflict of interest policies over their federal awards. And so therefore then by these policies, the non-federal entities, us, have to disclose in writing even any potential conflict of interest to the federal awarding agency. And we have to also, we have some mandatory disclosures now that say in a timely manner that if we have any violations of criminal law, like fraud or bribery or gratuity violations, that we have to make these disclosures according to 200.338, or there are remedies for non-compliance, which could include suspension or debarment, but they have other nasty things that they can do to you too. So there's a lot. This is definitely worth putting the time into thinking about and preparing your policies, reviewing your conflict of interest policies on your campus to make sure that they are in compliance with this regulation. One of my favorite things about uniform guidance is that this section 200.210 laid out the information that has to be contained in a federal award now. And almost always now you'll see these elements on the front page of the award document. So there are 15 standard elements in all now, and those have to be included by full text or by reference. And so some of those items include the recipient's name, which would be obvious that that's important, and our DUNS number, or now, as Elaine was indicating, our new unique identifying number. We also see there the FAIN, which we talked about earlier in the acronyms, the unique federal award identification number. We're going to see our federal award date, the period of performance start and end date. We're going to see the amount of federal funds that were obligated by that particular action that's you're receiving, and the total amount of federal awards obligated altogether. We're going to also see an approved budget amount, and we're going to know if there's any cost sharing or matching involved. We're going to have a project description that's going to be for to be compliant with our statutory requirements for reporting. We're going to have some information on the federal awarding agency and their contact information for the awarding official, the CFDA number and name. We're going to know whether that award is R&D, and we're also going to have the F&A information to know what rate is applicable to the award. So back in the day, it was when we were in the Wild Wild West, we sometimes had to dig real hard to find all these elements to do our setup in our accounting system to be able to track and report properly. So it's really, I think, one of the greatest features of uniform guidance, that all these items are specified now, and that they're almost always very easy to find, very upfront, and user-friendly. All right. Another item, now that we're in the post-award section of uniform guidance, is we're going to talk about performance measurement for just a minute. So the under the previous circulars, there wasn't much said about the actual measure of performance. And so why it's important now, we demand much more transparency from our government about spending, and that our money is spent well, that the government is a good steward of taxpayer funds. So it doesn't do any good for institutions to do all this research and then put the research in a file cabinet drawer and not share it. So now the reasons and the logic behind these new requirements is that outcomes are shared, that lessons learned are shared. And so the adoption of promising new practices can be widespread and a bigger bang for the buck as far as the taxpayer goes. We also now have a lot more government-wide information collection points for information about our awards. So think about FAPIS, we talked about earlier, where we're going to be reporting performance and integrity information, and FAFATA, if you're familiar with FAFATA, and again, that's the way I pronounce it. I'm not sure everybody does, but that's the Federal Funding Accountability and Transparency Act. And so for consistent reporting from all the institutions and organizations across the country that are receiving federal awards, it makes perfect sense that there be a consistent and streamlined system for reporting, for gathering all the information together. And then we definitely want to relate, where we can, relate the financial data to the accomplishments of the project, so we can demonstrate then cost-effective practices in the funding that we receive. More about internal controls. Okay, so this is the part where we're talking about, we had the definition of internal controls earlier, and we had some information in the housekeeping section about it. But this now being in the post-award section, the guidance tells us what we have to do to regarding the internal controls regulations. So we're going to be establishing and maintaining effective internal control over the award to provide reasonable assurance that we're managing the award in compliance with the regulation and within the terms and conditions of the particular award. We're going to evaluate, and also we're going to monitor compliance in an ongoing way. And if we have something that we find that's gone awry, then we're going to take prompt action on it. PPI, another term that you know, just not really exist before the digital age, but that being our personally identifiable information, and actually that should be PII, personally identifiable information. So we'll have to fix that on the next slide. And then to go on to 200.306, cost sharing, to level the playing field for institutions across the country, where some are big and some are small, and some have great assets as far as resources go, and others maybe not so much, to make sure that we're getting good input from across the country. The federal proposals now, voluntary committed cost sharing isn't expected anymore, and it actually can't even be used as a factor when the merit review of the application is going on. So except for in those cases where it's required by statute, cost sharing, the voluntary committed cost sharing can't be considered. So if it's both in accordance with the federal agency regulations and it's specified in the notice of funding opportunity, then in those cases, cost share can be considered. And just a note on cost sharing in general is that if you have cost share, then you're having to track that separately, obviously, and it affects your organized research base for computing your indirect cost rate. So just to, I guess, lessen the complications for everyone, only the mandatory cost sharing or cost share that's specifically committed in the project budget has to be included in your organized research base. You're up, Elaine. You need me to take this slide? You're muted. Well,
Sorry, I had some background noise, so I muted myself. Revision of budget and program plans. We all know about rebudgeting, and now they've implemented some guidance on what you have to get pre-approval from for, and the main one that I see a lot is prior approval to transfer from participant support costs. And then there's restriction on rebudgeting of training costs, or the restriction on rebudgeting training costs has been removed. And there's new language that better reflects project directors can be away from campus yet remain engaged in the project as proposed or as awarded at the awarded level. Prior approval is only required in the event that there's disengagement from the project occurs during the absence. The disengagement from the project for more than 3 months or a 25% reduction in time devoted to the project by the approved project director or principal investigator. So disengagement could be for family medical leave or an unrelated academic sabbatical. So the key here is that you have to remember more than 3 months or 25% reduction in time.
Elaine, I think a big difference too from the old days here is that now with the technology that we have, project directors can work from anywhere literally in the world. And so I guess you did mention that being away from campus, but they can be way away from campus and still be working on the project just as if they were physically present with the institution.
Yes, that is correct. In this time of COVID, where we're all away from campus, or most of us are, it gives a new meaning to being away from campus. We're all learning new things. Okay, equipment. Equipment, very important. Property records must be maintained that include the description of the property, the serial number or other identification number, the source of funding for the property, including the FAIN, which has to be labeled somewhere on the property, who holds the title, the acquisition date, the cost of the property, the % of federal participation in the project cost for the award, under which the property was acquired, location, use and condition of the property, and any ultimate disposition data, including the date of disposal and sale of the property. One thing that we have to remember also is that with the state, we have certain surplus requirements that we have to follow. And so you have to be very cognizant of all these different factors coming into play when you're looking at property and disposition of property. Supplies. Okay. Supplies vest in the non-federal entity upon acquisition. And that is important, but what even more important is this next part, 200.453. Any residual inventory of unused supplies greater than $5,000 at the completion of the federal project and not needed for any other federal award can be retained for use on other activities or sold, but the federal government must be compensated for its share. The amount of the compensation is computed in the same manner as equipment sold to a third party. And I've actually had to report on this on one of my grants. Luckily, we didn't have any supplies, so I didn't have to worry about it. But if you've got a project that's got a lot of supplies, when it's getting close to being ended, you're gonna have to really watch that, because $5,000, it could add up in no time at all. Okay, procurement standards. The non-federal entity must maintain written standards of conduct covering conflicts of interest and governing the performance of its employees engaged in selection, award, and administration of contracts. Let's see. And then there's also a new provision that covers organizational conflict of interest and competition.
I was
Yes.
going to jump in there real quick, Elaine, to say that we had standards, being a state agency, about conflicts of interest regarding those employees that are engaged in selection, award, and administration of contracts. And so I think we were pretty well covered on that before, but we didn't have the institution or organization conflict of interest policies previous to uniform guidance. So that was something that was new for us and that we had to get done fairly quickly to remain compliant.
Right. Yes. And then we have competition. The non-federal entity must conduct procurements in a manner providing full and open competition, and that prohibits use of statutorily or administratively imposed state or local geographical preferences in the evaluations of bids and proposals, except in cases where applicable federal statutes expressly mandate or encourage geographic preference. More procurement. This gets into the micro purchase, where we had a lot of adjusting to do. So the methods of procurement to be followed includes 5 procurement methods: micro purchases, small purchase procedures, sealed bids, which is formal advertising, and then competitive proposals and non-competitive proposals. So this is where the 10,000 comes into account. So procurement by micro purchase, acquisition of supplies or services less than 10,000. And then, of course, the non-federal entity must distribute micro purchases equitably among qualified suppliers. And they can be awarded without soliciting competitive quotations if the non-federal entity considers the price to be reasonable. And then, of course, there's a new category which allows purchases without competition. Oh,
And this is the procurement bear claw. Maybe folks have seen this before, but this was new with uniform guidance. And this graphic was created by Gil Tran from the Office of Management and Budget. And I consider Gil Tran to be the rock star of uniform guidance. He was involved from the very beginning in understanding the need for the regulation to be updated, and worked with different groups all the way through to the implementation of, and beyond of uniform guidance. I've been to some of his trainings at conferences since uniform guidance was implemented. But if you want to look for this graphic, you can still find it in the COFAR FAQs. So the Council on Financial Assistance Reform, the organization that helped with creating uniform guidance, they have an FAQ document that you can find by just searching COFAR UG FAQ, and you can see a lot more clarification, I guess would be a good way to say. If you have a question about uniform guidance, probably somebody else did too, and that's a very helpful document to study if you're still having trouble wrapping your head around uniform guidance. Back to procurement though. So this graphic is to illustrate the 5 different methods of procurement that we're allowed to use according to the circumstances of our purchase. And so that 1 being micro purchases, 2 small purchases, 3 is sealed bids, 4 competitive proposals, and that 5th one, which is a non-competitive proposals or sole source. And the palm, I guess, of the bear claw gives us our general standards. And so those tell us we have to have our purchasing policies documented. The items that we buy have to be necessary for the completion of the project. We want to be guided by the principles of full and open competition. We want to make sure that we have good conflict of interest policies so that we're our purchases are going to be getting the best benefit to our organization. And then finally, more documentation in the section E here is the cost and price analysis and the vendor selection. So in thinking about those, if you know, like in there are, I guess, a number of circumstances where if it's not in writing, it didn't happen. And so the warning there is that if you go through a process of analyzing prices that are available to you, like if you're looking at quotes and so forth, and you pick one of them for a specific reason, that reason needs to be recorded and saved with the grant files so that you know why you chose the vendor ultimately that you chose, and that you can defend that later under audit, which might be a year or 2 years or even longer down the road, to be able to defend the decisions that were made at your institution. Want to talk a little bit about subrecipient versus contractor determination next. And so to this section 200.330 explains the roles of subrecipients and contractors so that you as the non-federal entity can determine the relationship, and then therefore what requirements are applicable. And so the non-federal entity provides a subaward to a subrecipient, and you provide a contract to a contractor. But regardless of what the The agreement is called. It's the relationship that matters. And so that's what determines then what requirements are applicable. So I just wanted to go over with you real quick some of the things that help me determine if an entity is a contractor versus a subrecipient. So contracts are executed to obtain goods and services for our own use. And there's a procurement relationship with the contractor in that case. Those contractors provide goods and services within their normal business operations. So thinking about an example might be Staples or Office Depot. They provide goods and services within their normal business operations. They have many different customers that they're providing goods and services to. They operate in a competitive environment, and they provide goods and services that are normally ancillary to the operation of the federal program. And so thinking about that Staples example and buying supplies from them for a federal project, usually they're going to be in the contractor role, and they're not going to be subject to those compliance requirements as a result of you having a federal grant award. Thinking about that from the opposite standpoint, though, for subrecipients, those subrecipients actually carry out part of the scope of work of the project. And by that, it creates a federal assistance relationship with the other party. So thinking about that to its logical conclusion, then that other entity has to be eligible to receive federal financial assistance. And they're going to be measured by their performance as to whether the federal objectives were met. They might have the responsibility for programmatic decision making for their part of the scope of work. They're going to be the expert or the keeper of that part of the work, and so therefore they have to make sure that it's that the federal program requirements are being met. And finally, that the federal funds are used to carry out a program for a public purpose that's specified in the authorizing statutes, and not a situation where they're providing goods and services as a benefit to the pass-through entity. So back to the Staples example here, there could be a situation where Staples was a partner or a subrecipient in a federal award if they were doing some part of the actual scope of work of the project. But generally speaking, that's not going to be the case. So I hope that helps illustrate how I look at them differently anyway, and how I try to frame them. Sometimes it is fuzzy and it's hard to tell what the other entity, what the relationship with the other entity is going to be. And so you have to ask questions and get more information sometimes to tell for sure what role that other party is playing in the project. If it's determined that they are a subrecipient, then 200.331 requires that we evaluate the risk of working with that partner. We have to evaluate their risk of non-compliance, and we have to know, can they meet the terms and conditions of the award? And we have to figure out what appropriate monitoring looks like for that entity. And it can be different for every entity according to their experience with the same or similar types of awards. Maybe you've worked with them in the past with similar funding, and you know that they have their systems in place, their internal control is good, and you know they have the personnel that can do the project well and according to the regulation. You could also look at their previous audits to see if there are findings, particularly if there are findings that are in any way related to the current funding type that we're going to be receiving. You want to look to see if they have high turnover of personnel in those strategic and significant positions, or maybe they've just changed accounting systems at their institution and it may be bumpy at the outset. So in thinking about that, you have to take into consideration all these things to know that if additional terms and conditions are needed in the award, to do things like give them training or have them get training, or that you're going to provide more on-site reviews or other agreed upon procedures. Because if you don't do it at the beginning and get those additional terms and conditions placed into the award agreement, the sub-award agreement, then you are going to have a difficult time trying to impress these any changes later on. So it's definitely best, even though we're not told specifically by the guidance when we have to do this risk assessment, if we don't do it before the award is made, then it could be too late to get what we need later. A little more about subrecipient monitoring and management. Just like the federal government now is required to give us those 15 standard items of information in our award documents, we have to pass on to the other entity, our subrecipient. We have to pass on this same information to them too. They have to know what the federal identification number of the prime award is. They have to know what our UEI is, that unique entity identifying number. They need to know for sure what indirect cost rate is covered under the award, and any other requirements that we're going to impose on them, particularly our access to records to be able to do audits as necessary, are very important. So number one, thinking about, we have to include these items in the subaward as to what we're going to do, and then we actually have to do it. So after the award is made, we have a number of monitoring requirements that we have in accordance with subpart F. And so we have to verify that they continue to have audits as required. We may need to make adjustments in our own records according to adjustments that we find and require of the sub. So thinking about that, if we discover something in our review and subrecipient monitoring that requires records to be changed, invoices to be modified and so forth, funds to be returned, anything along that nature, then that may require then that we change our records based on those findings as well. While we're monitoring, we have to make sure that all of their reporting, financial and programmatic reporting, is received as appropriate. And for any deficiencies that we find, we got to follow up on those. So it doesn't do much good to bring forth a finding if you don't follow up and make sure that the issues are corrected. So we could have to issue management decisions on those audit findings that are pertaining to those subs. As part of the new compliance requirements in 200.415, we have now a required certification when we're actually submitting invoices for payment, where we're saying that to the best of our knowledge, that that the invoice is true and complete and accurate, and that it meets the purposes and objectives of the award. And it was just a little bit disconcerting to also then have to say that you're aware that any false or fictitious or fraudulent information could subject you to criminal or civil or administrative penalties. So we didn't have this before, where we actually had to just say right there in writing that we know we're subject to all sorts of penalties if anything is false or fraudulent. So we hope we never have to see that. But we did, as we were implementing uniform guidance, we actually got one of our invoices was rejected from our sponsor because we didn't have this certification statement in full on the invoice. So I guess it's probably just a matter of course now that everybody has this statement for all the reports and invoices that they're submitting. But it was new for us when uniform guidance came along. Elaine, would you want to talk about administrative and clerical costs?
Sure. I've been having some issues with coughing, and so I've muted myself several times so that you guys didn't have to hear that. Administrative and clerical costs. Under 200.413, the salaries of administrative and clerical staff should normally be treated as indirect costs, or F&A costs. Direct charging may be appropriate if all of the following conditions are met. Administrative clerical services are integral to the project or activity. The individuals involved can be specifically identified with the project or activity. Such costs are explicitly included in the budget or have the prior written approval of the federal awarding agency. And the costs are not also recovered as indirect costs. The word integral here seems to be a bit subjective, but if they are explicitly included in the budget, then they can be direct charged to the award. And you would probably likely see this in some of the bigger awards where you end up having to hire a bunch of people. I know that's where we've seen it because we've got several awards that part of it had involved hiring all the staff to work on the fund, to work on the grant. Okay, indirect costs. Any non-federal entity that has a federally negotiated indirect cost rate may apply for a one-time extension of a current negotiated indirect cost rate for a period of up to 4 years. And then also in the appendix, a utility cost adjustment of up to 1.3 percentage points may be included in the negotiated indirect cost rate of the IHE for organized research. So that's institution of higher education. In case you don't know, facilities is defined as depreciation on buildings, equipment, and capital improvement, interest on debt associated with certain buildings, equipment, and capital improvements, and operations and maintenance expenses. Administration is defined as general administration and general expenses such as the director's office, accounting, personnel, and all other types of expenditures not listed specifically under one of the subcategories of facilities, including cross allocations from other pools. So I know we just renewed our indirect cost rate, and we toyed with the idea of just doing the one-time extension, but we ended up just going ahead and doing the full proposal and getting it taken care of, so that if we needed to at a later date, we could use that extension for some reason or another. Okay, compensation personal services. Uh, I'm sure we all know what effort reporting is. So periodic certifications of effort are no longer explicitly required, and previously described acceptable methods of allocating payroll to sponsored projects have been removed. There is an increased emphasis placed on the non-federal entities' system of internal controls, and the concept of institutional based salary is now included. So we really haven't changed anything in the way we do our effort reporting. We're still continuing to do it the same way. However, the one thing that we've gotten done is that we've got it now electronically. And that has been a bit of a milestone for us, because sending out effort reports 3 times a year and getting them back can be very time consuming. So under 200.430, the non-federal entity establishes a consistent written definition of work covered by institutional-based salary, which is specific enough to determine when work beyond that level has occurred, and this can be described in an appointment letter or some other type of documentation. And these really, I think, have more focus on the institutes of higher education. And so under 200.430, it's recognized that teaching, research, service, and administration are often inextricably intermingled in an academic setting. When recording salaries and wages charged to federal awards for IHEs, a precise assessment of factors that contribute to the cost is not always feasible, nor is it really expected. So. Okay, continuing on. Direct costs. Okay, the major thing that you have to remember here is that the removal of major project requirement and recognition of administrative workload. So this is where your direct charging of salaries comes into place. So it's no longer a major requirement. Under 200.414, indirect costs, a 10% de minimis indirect cost rate is now available to any non-federal entity that has never received a negotiated indirect cost rate, except for those non-federal entities described in Appendix 7 to Part 200, which may elect to charge a de minimis rate of 10% of modified total direct costs. Importantly, if chosen, the non-federal entity must use the 10% rate on all federal awards until the entity negotiates an approved rate with their cognizant agency. And again, we get into what are facilities. So, and I think we provided a good definition of those earlier.
Yeah. And one thing I notice now is that the term F&A is a lot more consistently used than it used to be. You hardly ever hear overhead used anymore, and less indirect cost term is used, and much more consistent to F&A now to refer to the indirect cost language.
Okay, exchange rates. Under 200.440, this allows for cost increases from fluctuations in exchange rates with certain conditions being met, and of course the availability of funds. We see a lot of that in the Fulbright Awards that our faculty members have been receiving. Under 200.453, materials, supplies cost, including computing devices, Charging computing devices, laptop and desktop computers, and associated supplies as direct costs is allowable for devices essential and allocable, but not solely dedicated. That's what has changed. Is not solely dedicated to the performance of a federal award. And so computing devices are defined as supplies when the cost is the lesser of the entity's capitalization level of $5,000, are subject to the less burdensome administrative requirement of supplies as opposed to equipment. And then publication and printing costs under 200.461. This particular I'm not saying definition, but this comes into play when you are at the end of your award and you're trying to charge the grant for publication costs. A lot of times you don't know if you're going to have publication costs before the end of the award, but under this particular item, it resolves any long-standing issue with charges necessary to publish research results, which typically occur after expiration, but are otherwise allocable to the costs of the award. So in other words, the non-federal entity may charge the federal award before closeout for the cost of publication or sharing of research results if the costs are not incurred during the period of performance of the federal award. Have to make sure that you charge it to it before your final drawdown, because once your final drawdown date has passed, of course you can't do that.
To talk about subpart F audit for just a little bit before we go. The modifications that were made to this section of the uniform guidance were made in an effort to strengthen oversight over federal awards, federal funds. The auditors wanted to shift the focus to areas of the greatest risk of fraud, waste, and abuse. One of the main purposes was to increase transparency and increase accountability and gain further consistency. But in 200.330, the single audit threshold was increased, now up to $750,000 in federal awards received during a fiscal year, up from $500,000. The threshold for audit findings for reportable question costs increased also from $10,000 to $25,000. 200.516 also requires that questioned costs be identified by CFDA number and by FAIN. It also requires there to be identification of whether the audit finding is a repeat of a prior audit finding. And so that's very important to know when you're assessing risk. If you see that an entity has had an audit finding, it's one thing, but to see that they've had a repeat of the same audit finding, to me says a lot about the entity's internal control or lack thereof. Because obviously if they didn't, they should have figured it out when the auditors brought it to their attention and gotten it corrected. But to have a repeat audit finding, which now is identifiable by a particular audit finding number and by the CFDA number and the FAIN, is going to really help you to zero in on what you need to know from their audit report. 516 also requires that the formatting of the numbers be consistent. They require a particular format for data collection, and so that's all laid out and prescribed as to how the audit findings are numbered, and then therefore how that information is reported to the government. And I think that was the last slide that we had. I wanted to see, now we do have a good bit of time available for questions or comments. I noticed earlier there was a flurry of chat going on, but I wasn't able to keep up with it. So now might be a good time for us to get our questions answered. Okay, let's see. Maybe if we can start from the beginning. If you work for a private nonprofit university, would you expect your university to have been covered by A122? Okay, my take on that question is that a university, even though it's a private not-for-profit university, is still going to fall under the institutions of higher education. And so we could do some quick research and possibly find a better answer to that, but that's my gut reaction on that you're still an institution of higher education and would not necessarily fall under the nonprofit regulation as the go-to.
Yeah, well, if we go back to the slide, the A110 is the administrative requirements for higher eds, hospitals, and nonprofits. So, so I would think that A110 would be appropriate there as well.
Yeah, those regulations as far as administrative requirements are going to be the same either way for the nonprofit versus the for-profit or the state institutions of higher education. But my best guess on that is that you're still going to fall under the as far as previous regulation that would have been in effect. It would have been
A21.
Yes, A21. And now, because A122 and A21 are both incorporated into and folded into the Uniform Guidance Regulation, now it doesn't matter. So you don't have that dichotomy anymore, or the problems of trying to make decisions on what applies, because now both of those are included in Uniform Guidance, which is kind of, I guess, what they were looking for from the beginning when Uniform Guidance was first being imagined and created, because we had the same situation as a state institution. Would we follow A87 or would we follow A21? And so by that same logic, we were subject to A21 before, even though we were a state agency. So it reduces the confusion altogether to not have to worry about all those different specific circulars now that they're all combined and included in Uniform Guidance. Let's see. The next question is Subpart A still the same after this upcoming November update, or is it down to just 200.1 equals definitions? So I can't answer that question because I don't know what's happening in November other than the change that's upcoming about the unique entity identifier. So that question, I'm not able to.
Amy, I could chime in a little bit.
Please.
I just want to point out, so all of the questions on the exam have already been submitted. So if there are changes that have not yet occurred or are planning on occurring, those changes won't be reflected on your version of the test this fall.
Thanks very much, Eric. That's very helpful. I took the CRA exam a long time ago now, and at that point in time, the test was mostly on the previous circulars and hardly any, if any, on, I guess there would have been maybe about a third that was on uniform guidance. And so now it's flip-flopped the other way to totally uniform guidance, I bet by now. Let's see, what do we have? Subpart A still contains definitions, but everything was merged into 200.1, so the terms themselves no longer have individual reference numbers. Okay, that's good to know.
Yes, good to know.
The next question asks us to elaborate more on contract unless transaction meets the definition of subaward. All right, so I'm not sure what exactly the question is here, but the document itself can be called a contract when it's actually a grant or when it's actually a subaward. So contract is just, to me, it's just a word that means that it's an agreement between parties. So what I look to when I'm trying to make my decision on if it's a subaward is looking at that, is that other entity performing a piece of the scope of work in the agreement? Can we do the project without them or not? Are we just, if we're just buying cookie cutter widgets or services from the other entity that we could get anywhere from multiple parties, versus do we need them and their expertise specifically for the successful completion of the project? In that case, that definitely points more to a subaward. If we don't have either the facilities, the equipment, the personnel to do some part of the work, and we're engaging another party to join us to complete the project, then that's the subaward. We still may refer to the agreement between us to get that done as a contract or a subcontract, but ultimately, if they're performing a necessary piece of the work to get the project done and we can't do it without them, then it's definitely a subaward. I don't know if that helps or not, but hopefully so. Elaine, can you think of anything else to speak to that?
No, actually, I think you did a very good job of explaining that. You just need to remember that the focus is on the relationship and not what the agreement is called. And I think you did an excellent job of explaining it.
Okay, thank you. Let's see, new definitions on the fall CRA test. Okay, on that, back to Eric's answer. If the definition is in existence already, then my guess there would be that yes, it could be on the fall CRA test. If it's something that comes up after the test has already been created, then obviously not. They wouldn't ask you on brand new stuff. Let's see, should we focus on the sections you've discussed in the uniform guidance? I don't recall any specific section questions that got to what section you find something in. That's not really what's important. Generally speaking, it's the concepts. It's just that for me, the uniform guidance document was so big when I was first studying it. It was just overwhelming. And so my method of breaking down the sections and trying to just settle in my mind what they were about, and taking it by chunks to ingest it and digest it. You can tell I love food. I love eating everything about food. So everything boils down to, it seems like some kind of food analogy, but it just helped me. And so you might find another way to get the concepts more to settle in your mind and help you. And I'd say go for it, whatever method that ultimately helps you remember, because on the questions on the exam, usually there's going to be at least a couple or three answers that have some piece of the truth or some piece of the whole answer included in them. And it just, you need to have the concept in your mind of ultimately to be able to figure out what's right, what's the best answer of the choices that you have.
So I'm going to chime in if it's okay. Of the concepts that you've covered, are those the areas of the uniform guidance that we should, start with focusing on, or should we read the uniform guidance cover to cover?
I actually printed a copy of the uniform guidance and went through with a highlighter to start my study, just because I wanted to make sure that I didn't miss anything. So certainly these are some highlights that we've gone over, but there's a lot in there. There's probably more than somebody can possibly remember in there altogether. And so having a copy that you can highlight, even if it's a digital copy that you can highlight and reference, I think would be a helpful study method to use, because these were definitely just the high points that we could cover and not bore you to death in a presentation.
Thank you. Thank you very much.
If you like paper, definitely highlighting and tabbing is real useful. We're trying to save paper these days though, so I'm learning how to digitally highlight like I used to do on paper. But however it makes you be able to quickly find what you're looking for, I'd say is going to be super helpful. Let's see, you mentioned a document for studying uniform guidance, but you missed the document. Okay, yeah, let me go back to that real quick. So it's the COFAR FAQs. I'm going to share screen again real quick to show you this document. So this is a 47-page document that that has the frequently asked questions about uniform guidance. And this came out, though it's been updated in July of 2017. This document came out by COFAR, the organization that was instrumental in helping in the creation of uniform guidance. And so their website here, let's see how I've got dol.gov. That's a really long address here, but I got to it today by just entering in my Google search bar COFAR, COFAR, space UG for uniform guidance, space FAQ, and it came up on as the first document. So I think you should be able to find that if you get to looking for it. But it goes into, you can search for it too. It goes into quite the detail of a lot of smart people who came together to think about, okay, as a practical matter, how do we implement this guidance and what does it mean to me in my situation? So there's a lot of stuff that's covered here that's not specifically clear in the uniform guidance as to how to apply it. So it could be helpful to you. Let's see what else we got there. Oh, now I've lost my chat. Here we go.
Okay, so question is, how do you certify that clerical administrative costs are not also recovered as indirect costs? I think this is going to be something that you should be able to determine fairly easily. If you've got, I know we've got quite a few federal grants that have a reduced rate of indirect costs, say 8%. And so these are rather large awards, multi-year awards. And if you have to hire people in order to be able to do the work of the grant, then you're most likely going to be able to certify that you're not also recovering it as indirect costs. Does that make sense?
Well, I think too, Elaine, it's helpful if the person doing the indirect cost rate proposal knows a great deal about the accounting for the grants.
Right.
So that they know, they can tell by fund number, or they can tell by the purpose code of the funds. They can tell what's going to fall out in the indirect cost pools and what's going to fall out in the direct cost pools. So the person completing the facilities and administrative cost rate proposal should know by the numbers, by the information that they're gathering and the process of completing the analysis, what's included and what's not. Okay, someone asked, are these slides available and when is the next study session? So Eric, can you answer this for them? Because we submitted the slide deck and I don't mind if it's shared, but I'm not sure what Virginia Tech's policy is on the slide decks.
We actually do have a copy of it up in Canvas, and shortly after we'll also have a recording of this video as well.
Good deal. Thank you. Practically speaking, how do you monitor residual supplies once the project ends? And so we have had people actually go and count them. You know, they should have, if they have good internal control, they're going to know what supplies were purchased for the project and know where they're kept. So engaging a departmental administrator with access and knowledge of those supplies, and basically doing a spreadsheet and getting the values of them together if there's any question of that threshold being reached. Elaine, have you had some specific circumstances where you've had to have somebody counted up?
Not yet, but I think we're going to be looking at that within the next year, because we have a large grant that over 7 years that we've been cautioning all the subrecipients to make sure that they don't have excess supplies on hand at the time of when we're getting close to the end of the award.
And then if you did, I mean, you just have to pay the government back for them. I mean, I guess it comes down to it, you know, it could happen. And so you can, just for good cost control, you wouldn't want a ton of stuff laying around. But if it so happened that there were, maybe it's not very many items, but they have a lot of value. And so it could happen, and you would just need to be prepared to write a check to pay the money back. Okay, so let's see here. The next question. How detailed are the questions regarding uniform guidance? For example, the last three numbers. And I would say not. The questions are not going to be that detailed as to specifically say what's in 200.113. Where you might get a question though is if you might have a question about that's going to be a clue. 200.113 is going to be a clue. If it said 200.113 tells the audit requirements for a particular project or particular funding, and you would know then that no, that's wrong. That because the audit subpart is F, which is way up in the high numbers at the end. It's not 113. So you might get something like that, a question that's getting at the section itself, but not the specific citation down to that level of detail.
Amy, we missed one.
Did we?
Yeah,
Sorry.
are consultants subject to procurement thresholds?
I would say yes. So there was discussion that I remember several years back about subawardees altogether. And so generally in those cases, they're going to fall under sole source, because why would you pick a sub if they didn't have the specific expertise and abilities and whatever it is that they have that you want and need to partner with them to begin with. And so in those cases for subawards, there's the justification is usually going to be sole source. But for consulting, it could fall under sole source as well, because if you need the consultation and advice from somebody who has particular expertise, it's going to be the same way. But it certainly would not hurt, and I would say it would be advisable to, if it's over the threshold, that you document the why as a sole source. We have a pretty simple sole source documentation form that's mostly radio buttons and multiple choice, that to make it as easy as possible and make sure all the thought points are covered. And so you could easily do something like a sole source justification just for your files of how and why you chose particular consultants or subaward ease. Can you think of anything else for that?
No, I can't think of anything else for that.
Okay. All right. So let's see, what question are we on now? Here we go. Subawardee having the control to dictate the direction of the project as opposed to a contractor that was told what work to do by scope of work. And yes, I agree. Subawardees do have a lot more control of the direction of the project. So if I didn't say that correctly, then or I misled on that, then I apologize, because absolutely the subawardee does have programmatic decision-making ability, and your contractor, you're going to be telling them what to do or what you want to buy, or be much more specific about what they're going to be doing, and very little control as to the direction of the project overall. FYI, Incura has a nice spiral bound uniform guidance desk reference? Yes, they do. We got some of those on our campus.
Yes.
And Elaine uses one that she's got nice color coded highlighting in and little sticky tabs and all sorts of stuff. So yes, that is a great resource. The spiral bound version definitely makes it easy to leaf through and look for, find what you're looking for. I definitely kept a bookmark on my computer for uniform guidance that I could jump to with a couple clicks all the time. So that was very helpful to me as well, to be able to use the search features, do a quick control F and find, everywhere where a particular term is used in uniform guidance. Made that very quick and easy. And I had a copy previous to getting the spiral bound one. I had my printed copy in a 3-ring binder and had it nicely tabbed as well. So I think maybe the most important thing is to just get something, whatever you can get your hands on, and just keep it handy so that you're referring to it regularly, and your however you can get the information in your brain and to stick there to use whatever works for you. Okay, so we've got the frequently asked questions link here. Thanks very much, David, for putting that in the chat. That's handy. And let's see. David wanted to ask more about the effort reporting and how it was no longer specified. Okay, so let's talk about that a little bit more. So it's the method of doing effort reporting and certifying effort that's charged to grants from the previous circular was very prescriptive. It told you exactly what to do. It told you exactly how to do it. It told you when you did it. And it very much was black and white, as black and white as federal regulation can get anyway. And so how that changed when uniform guidance came into effect is they no longer said how you have to do it, how you have to go about your method, or what method to use for charging wages, salaries and wages to grants. What they said though is that you have to do it right. And so what method you use to go about figuring out the amounts, they didn't care so much about. What they cared about is that you have internal control sufficient to ensure that what you do charge as far as personnel costs to your grants, that it's right. So that's what we were trying to get at there. They no longer specifically say that you must submit effort reports that look like this these many times a year on a semester basis or whatever, or at least annually. They no longer says exactly how you have to go about that you have to have a piece of paper that someone signs to certify their effort. It's more about, are you getting the right charge at the end of the day to your agreements, and not overcharging, especially. Definitely not overcharging the government for the personnel costs involved in the project. So effort reports, you don't have to have specifically. You can do it any way you like, just so long as you do it right, or you get to pay the money back.
That's right.
Elaine, that's one thing that does remind me of a question I was going to ask you about. So right after uniform guidance came out and folks no longer had to do effort reporting in the old way, there were audit findings, several of them, at big institutions where they stopped doing effort, the previous effort certifications, and just started allocating in different ways that they that they tried. And so I know earlier on, there were some of those methods that were not successful and resulted in audit findings and institutions having to pay personnel costs back because they didn't pass audit muster. So do you know what's happening on that these days? Anything current happening?
I know they did a couple of trials with a couple of different agencies, but I really haven't heard anything more on that. Some institutions were going to where the project director was certifying all of the effort on the project. But I haven't heard anything about any audit findings on anything like that.
Okay, and I did hear of some on that method. And so, and that would concern me for us too at our institution, just because sometimes I know that project directors, especially on big projects, they don't know all of the personnel that are on the project. They don't know them firsthand. They don't know what they're doing firsthand. And so it would be relying on a lot on the project director to really be managing the personnel and knowing what they're doing and knowing if the amounts that are being charged are correct based on the participation of that person in the project. So I really am still an advocate of individuals certifying their own effort if possible, and reviewing what's going to be charged to the grant as the front line to make sure that that's reasonable, and then maybe going to supervisors after that, and then project directors as the last resort.
Yeah. Yeah.
Let's see, we have a new question here from Shelley. You mentioned requires identification of whether an audit finding is a repeat from the immediately prior audit, and if so, the prior year audit finding number. Can I please elaborate on that? Okay, so I've seen this in only one case actually, where an audit finding was a repeat audit finding, and so it's just almost unheard of if somebody wants to continue to receive federal funds, that they don't clean up their act if they have an audit finding. I mean, I guess thinking about it from a standpoint of being a state agency, our state auditors would be all over us if we had an audit finding, a federal one, and that we did not address it and correct it. And so what the audit requirement in the uniform guidance, I'm going to pull that up real quick because I have it open too on another tab, is it's more or less how the audit findings have to be reported in the audit reports. And so let's see if I can find that real quick. Elaine, do you want to talk about that a little more while I try to look this up real quick?
Sure. I know what, I have a frog in my throat. I know we had, uh-oh. Can you hear me?
I can.
Okay, because I'm getting a message on my screen that says unable to chat. I'm like, okay. On one of our big grants, we had one of our sub-recipients that had a prior audit finding. And it wasn't anything major, but when it came around time for their next audit, it showed up as a repeat finding. And so in order for us to continue to assess the risk, we had to go back to what the materiality of that audit finding was. And so, and work through that whole risk assessment process to see if there was something more that we needed to do. And in that process, in our process, it wasn't something that was very significant, but we were watching to make sure that they were working on cleaning it up.
Okay, so did you get like, you just had further conversations with the entities?
Yes, and we were actually doing, we call them map visits, where we go out and meet with them and look at their records and look at their performance and just go over everything that and all the issues that we're finding. And so that has helped us immensely.
All right, very good. And so that, in the audit report, the auditors would be required by the section 200.516 audit findings. The auditors are required to say if it is a repeat finding, and then they're to identify it in a way that numbers that audit finding according to the nomenclature that the auditors are required to follow in reporting that audit finding. So it seems like, I mean, to be above the threshold for the auditors to report it, of course, it could have been in the time that was 10,000 rather than 25,000. Okay, yeah, so that's a big difference. With inflation now, maybe a 25,000 audit finding now is maybe not as bad as a 10,000 one used to be. But anyway, if you get those audit reports for your subrecipients and you review for the findings, hopefully the audits are clean and you won't have any problems, because if you do have audit findings, then certainly that increases the level of risk altogether. And I think we are at the end of our questions, and it's certainly been exciting. Exciting as uniform guidance can be, but I
That's right.
appreciate everyone's attention.
Yes, I appreciate all of y'all chiming in and all the questions, and hope you have a good study time.